What's up, everybody? Happy Friday. Welcome, traders, investors alike. What an interesting week we've had this week. And I'm saying that in relation to the thumbnail that I put on there for altcoin, S-coin. I'm not monetized, so shit coins. So, yeah, it's become a little bit interesting to watch. I'm having to dust off my old crypto watch list from 2 years ago because we got people sending me messages asking me WTF is going on with some of the big favorite altcoins from yesteryear, like Cardano, that's ADA USD, Solana, some of these big names that were very, very popular, very much heralded about in 2021 during the big bullish season of crypto 2 years ago. And now they are starting to make a little bit of a comeback that we got to notice it. I mean, when you look at something that's up 20%, that's when I start getting messages on Discord. I even get messages on text messages from friends that aren't typically crypto followers, and well, it's time to acknowledge it. And it's all going to be predicated on Bitcoin, and it's all happening kind of late too. So that's what we're going to talk about to start. And again, if you guys have anything that I need to look at, because frankly, I have not been watching these things. I, like most people, I've written them off. Should we? We're gonna talk about that just a little bit, definitely in the live stream here. But as always, I stream this every Friday, 4 p.m. That's Eastern Time, UTC -5 for you worldwide friends. And as always, it's on Discord. TradingView, which I love, and I do all my charts on. Actually, today they're going to send me a TradingView mug, like a commemorative mug, which I'm going to definitely drink water from and whatever on live stream. And YouTube, of course, my friends over in YouTube. And if you got any questions, I want to, hopefully if I get time at the end of the live stream, I want to talk about some setups of my personal methods using spikes, indicator that is mine. There's been a couple of good examples, and there's been some good discussions on my Discord asking me about like some setups. I got a good guy on there, really hungry to learn, by the name of, let me see what his thing is. Oh, it's on streamer mode, so I can't see it right now. But I like it when people ask me questions. The reason I have a Discord is not to charge people money for it, as most experts online are, is to have a platform where I can, answer these questions, because I don't sell any courses or anything like that. I let people come to me, ask me questions in live streams. Why do I do the setups I do? How do you use this, fancy indicator, this spike indicator, which is really very simple. I look for false breakouts. Now, right now, you're seeing everything do real breakouts. And I got a method for that, but we're unfortunately getting a little bit too long in the tooth, a little too far along. But we're going to look. We're going to look using Ichimoku to some of these altcoins. Alt being not Bitcoin, because Bitcoin is the big boy. And Bitcoin is what is driving this. I mean, that's just what it is. Okay, so let's just go ahead and jump into it. Again, if you got questions, post them in the chat. I'll get to them as the live stream goes along. Once I get done talking about the initial stuff I want to talk about, which is what's going on. So we got to start with Bitcoin. And Bitcoin, for the better part of this year, the first part of the year, it was trending bullish starting in January. I started posting in January, talking about in the live stream then, when it broke out of the Ichimoku cloud on the daily on January the 13th. It was a Friday then. I'm sure if we went back in here, we could see, hey guys, it's breaking out. This is after November. This is after FTX, and everyone was bearish as they could be about crypto. And then, if you recall, work on memory, guys. It's very important. Remember when the banks were all going to fail? That was in March earlier this year. And a lot of people say that crypto rose, or Bitcoin rose on that. No, it actually fell initially and then rose once all those fears abated. That's important to remember going into the future when we have some other little financial collapse or catastrophe or FUD, what Bitcoin may do. It may present an opportunity, but you got to be there to recognize it as such. But anyway, those were like the two bullish instances that I gave the thumbs up for. But now all the experts are coming out of the woodwork to say, oh, well, you need to buy it. Now, I was talking to a friend today who was having a conversation with another friend of his. I want to obfuscate the names here. I want to protect the innocent. Let me see if I can bring that up real quick. Jen, are you at your computer? Hold on a second. I just want to illustrate what the mindset is. It's gonna be too hard to find. But I'll paraphrase. Basically, a friend of a friend was saying, oh, here, I think I got it. Copy. I'm going to send this to you, Jen. Can you crop out the names? Hang on. If you can't, just say so. Just blur them out if you can. If you can do it. The premise is this. People are talking about how they need to buy crypto now before it's too late. Too late being at a way higher price than it was. And that's gonna. I don't want to betray anyone's trust with that message. But it's funny that people are coming out and making these posts about crypto. You know, back just a few months or years ago, the reason you bought Bitcoin was because it was going to be a solution to the fiat currency system. Well, with Lightning Network having a vulnerability that's been discovered, that's set back that whole use case for a very long time. And now, everywhere I look on Twitter, I'm just inundated with all these arguments where you better buy Bitcoin now before it goes to six figures. Lost in it is any semblance of, well, what are we using Bitcoin for? We're using it to get rich. And that's become the use case. I mean, it's reminded me a lot of Dogecoin, which, by the way, is up, 7% today. And so really, if we look at this in context of Bitcoin, Bitcoin really started to kind of take off in October. It's all based on this ETF stuff. And so let's think about that. Let's think about October. October is when the bull run really kind of started recently. It's only 2 months ago, not that long in history. And so if we go down to Solana, we can see that back in September of this year, it was pretty much doing a lot of nothing, just like everything else was. And then as Bitcoin has been getting a lot of interest, as crypto has been getting a lot of interest, every other altcoin, shitcoin, whatever you want to call it, is doing it as well. As you see, I've been talking about this for a couple of weeks. People have been asking me about Solana as things have been going on. And of course, now Solana is up 8% today. Cardano is making the big move that people were texting me about as well. It's all really popping off about the same time. And that's what's happened in years past. I've been around for way longer than most. And I've seen these alt seasons is what they call it. And they're all predicated on crypto, people being very positive about it. People are willing to take some risk on it. And it's coming from Bitcoin. It's coming from Bitcoin, of course. Yeah, so let me pull this up. So this is a message that thanks so much, man. This is a message like the interaction between two friends of mine. So it's starting to heat up, and if people are going to start panic buying, I'd rather them do it now than at 150K. And my friend was challenging them on what exactly they're doing. What are you saying here? And this person is like, well, that's they need to dollar cost average. That's the best way to do it. That's the smart way to do about it. I was like, the question, this guy's a good friend of mine. We're kind of the same mindset here. Like, we're both OG Bitcoiners. We've been around for over a decade. And really, we're kind of questioning all these, I'm sorry to say, but newbies coming in and asking, what are your arguments? Why do we want to purchase Bitcoin? And, well, I don't know, but for several reasons, which may be more or less the case, but I think primarily due to its inflationary nature, and it tends to increase in value over extended periods of time. There's your use case. Number go up. And, I can't be mad at it. Everyone wants to make a bunch of money on cryptocurrency. That's why we're here, right? I thought we were here because, Cardano or Solana, whichever one, has better smart contracts. I don't think anyone really factors that into the decision when they text me asking me like, well, it's up 20%. Is it a buy? There's one of two things happening. And this is the same thing that I've talked about for as long as I've been doing live streams here, because we've been together, me and my close friends, Discord, the people that follow me, we've been covering a lot of the same topics since about 2020 when I started doing this publicly. I've been trading for about 10 years now, 11 now. And I've seen it not just in crypto, but also in things like pot stocks or, EV stocks as well. There's just to name a few. I remember we were looking at this last week, Plug Power. Let's clean up the chart a little bit, maybe look at it on a weekly. And what happens in these price cycles is you get the big major interest, okay? And then as the months follow and interest wanes, you're going to start to get these up cycles right here. And a lot of people see each of these because they're big in their own right as resurgences, possible returns to normalcy, possible returns to those dreams that we had when we bought it in the big run up. I'm always of the opinion that if someone's asking you about it because the number is very high, it's already too late. That's not always true. That's not always true. But that's just one possible thing that could be happening. What could be happening now is we're seeing some price action like we've seen in other things. There's plug power here. I think I was looking at, what was it? This was one I was looking at when someone was asking me a few weeks ago. Here's one sand. I'm not sure what it does, but it's had a couple of these, resurgences as well. These are some more on the bottom of the list. I can't remember. These were some DeFi things that, interestingly enough, they're actually not doing too well. But in the case of Solana, if we look at it in a broader context, this could be the big rise up again that everyone's been hoping for to get out of it, or this could be the option for people to take some profit, get back a little closer to break even than they were. I can't say which one it is. I don't quite know the future. I just know the past. And everything is hinging on Bitcoin and this whole bull move. I don't care what people tell you about the halvening or whatnot. It's all based around this ETF. No one knows when the ETF is going to launch. I've heard really authoritative people tell me that it was going to be the week before Thanksgiving. That didn't happen. Then people are really sure it's going to happen the first week of January. Not sure about that either. But that's all what this is predicated on. Buy the rumor, sell the news. That's what I have to presume. And of course, all the other, because everything is pumping with Bitcoin, I think there's a lot of things going on. Number one, the psychology is getting very, very happy and bullish once again. People are willing to say, okay, crypto's back. That's my thumbnail. And people are willing to put the money into it. Or they have Bitcoin now, and they are shifting that Bitcoin, their Bitcoin gains, their profits from Bitcoin into leveraged positions on these others. In fact, there's a little bit of evidence at this point. I made a post on TradingView for a while. I don't post very often, but this is sort of neutral, a little esoteric, because I've been following for many years the BTC USD longs. There's also BTC USD shorts. And this is specific to the Bitfinex trading platform, pretty high volume platform. It's not indicative of the entire market of leveraged positions, but if we assume that traders are doing basically the same thing across every exchange where they can take out margin, what this represents, what this number represents, right now it being at 71,787, let's call it. That's how many Bitcoin are being held in leveraged long positions. In other words, on exchanges where you can take out margin, you can't do this on Coinbase. Maybe you can. I'm not sure. I don't use Coinbase. But Bitfinex is one where I don't think they even let Americans trade. But where you can, used to you could use a VPN. Now you can't. Maybe you can. I don't know. But where people take out margin positions, they don't create new Bitcoin to put on margin. What they do is people have their Bitcoin, they want to earn some interest on it, like they have for years and years, and they put it up for others to borrow Bitcoin and then use that for leverage positions. And the people that are putting it up for loan, they get an interest payment on it without selling their Bitcoin. So it's kind of a win for them because they're going to be hodling it anyway. And then the traders that want to take leverage positions, they do. And let me see if I can bring up the actual thing I did. Okay, publishing to. Yeah, so this is what I posted on TradingView earlier. It kind of gives a little bit of perspective to what's been going on in the past too. So the blue line here is the BTC USD longs. And so it's kind of variable as this goes along, but really, people, multiple people, maybe some whales, who knows, have been loading up really heavily on their leverage long position since about April of 2022. That's basically when we got into starting to get this big dip right here. And to be fair, to their credit, they've been holding on to these longs for the better part of a year. From started ramping up in April, May of 2022, and then on this big move up in March, finally you started seeing people take profits, and that's what it is. They're closing these leverage positions, and Bitcoin continued further. Now, what you see in this recent trend upward is almost a quarter now, even more than it was when I made the post yesterday. A quarter of these leveraged longs have been closed. They're closed out. People took their profits. They're sitting there with a big old win in their account. And that's coming into this move. People are taking profits. Now, that doesn't exert selling pressure on Bitcoin. So this is not on-chain analysis, because these are just people closing their leveraged positions. So it's not really showing that the trend is any way going to slow down. But what it does have for us to take away is that we're probably going to see less of a liquidation spike. Liquidation spikes are basically what happened around December the 3rd. Let's see if it showed up on the BTC USD longs. So December 3rd was about here. That was when they had a jobs report, December the 3rd, Friday. This is December 4th, when it happened on a Saturday of 2021. That's when we had this big dip from 54,000 down to about 41,000, $10,000 dump. That's what you see when there's a big cascade of people being forced to sell, like when a liquidation event, because when people's margins are very high. So because this leverage is starting to fall off, that actually means that's less likely to happen, believe it or not. And so I think maybe we're starting to see some people that had these leveraged positions take some profits in Bitcoin, either leveraged or otherwise, and they're starting to put them into riskier assets like the shit coins. Now, that is just my speculation. That's just my fundamental, fun to talk about analysis. What am I going to do? Hashtag this is not financial advice. I'm going to sit and wait. I'm not opposed to taking a position on these, but there's going to be a couple things that I do. I'm going to look from and this is getting into my methodology, what I like to do. I'm going to look to the beginning of the trend, let's call it middle of October up to here. This is Cardano that we're looking at. And I'm going to see if we can get a 50% pullback on the trend. I know at this point, when it's got a big green bar like this, that's just asking for a lot, but patience. Come on. I see a lot of familiar names on my live stream. You guys know me. You guys have been around for a long time. You're wise to this kind of stuff. You know that these things happen. And the worst thing you can do is FOMO in, like that guy was saying, where I'd rather you buy it now than when you have to. Well, I don't have to do anything. I don't have to buy it at 150K. Why would I have to do that? In fact, probably at that point, there's going to be a lot of other opportunities. And it's going to take a while to get there as well. It's not going to happen tomorrow. Okay, I'll look for better opportunities. I'm not going to just jump in. What aggravates me about that kind of mentality is ultimately they're acting like they are doing people a favor by trying to encourage them to buy now, but they're really doing themselves a favor. They're trying to further limit the supply. They're trying to push this thing even higher. They're trying to pump it. They're trying to Dogecoin this stuff. What is Dogecoin doing? So, yeah, I mean, it's getting a beneficial benefit too. Ah, man. But is it really getting it out of the woods? I think that it's a very dangerous juncture right now, because all this bullishness is coming from the speculation about the ETF. And I'm not convinced that the Bitcoin ETF is a bullish thing. This is not apples to oranges, but I cite to people a little historical event that happened in Bitcoin's history that people talked about at the time. This was back in the last major bull run. This was the thing a few years ago. This was the run right here. This was the run back in 2017. And then this Sunday December the 17th, 2017. This was the day, not day before, not after. The day of the high was a Sunday. And that was the day that at 5 p.m. Eastern Time, Chicago Mercantile Exchange Bitcoin futures were launched. This was the first big interplay of traditional finance, futures contracts, and Bitcoin crypto. This is the first time that they became joined. And a lot of people were buying into this announcement, thinking like, oh, well, all this move is justified. It's just going to get more bullish after futures launch because now people can buy Bitcoin with futures, just like they're saying with buy Bitcoin with ETF. And that was the top for that run. Apples to oranges, it is. But what's really kind of striking me about this price action now in Bitcoin, what I'm the most wary about is the fact that in the last cycle, which everyone likes to look at history, the history of the halvening, and then cite, oh well, halvening means up, three times before it does. But we had the all-time high in 2017. We had the bearish winter. And then we had this run up, which I remember everyone was getting very, very excited about in 2019. And then it fell off into COVID. And the low of that bear market was about 3,000 something. And then no one would have thought that in COVID it would have gotten down to 4,000 something. No one would have thought that. And so once again, we have a big run up here. We have a crypto winter. And then it's pulling up and getting everybody excited, presuming, because they want it to be true, that we're going to make a new all-time high. Maybe. But I'm looking at history here, and I'm telling you guys that it's not guaranteed. We'll see. We'll see. There's a couple of things, though, that I have to admit that I have missed in this move up. And let me go ahead. I've been ranting for a while, so let me check chat. Again, let me say, if you got questions, if you got symbols, altcoins to look at, look for their setups, where I would maybe potentially take them, post them in the chat. We'll take a look at them. I'm here to find opportunity. I need you guys' help, actually. And we need to help each other because I've got to dust off all my old list for crypto because, frankly, they've been a little dead for the last 2 years. All right. Let's look and see. We got TNX, Monster, Palantir. We're definitely going to talk about Palantir. What's up, Stone Pilot? Hey, Casey. ETH is breaking out over the 382 fib from the all-time high. Well, I'll tell you, Jeremiah, I only use one fib, and that Fibonacci is the 50% retracement. I know people like to use a bunch of others, but we're going to look at Palantir here in just a second, Jeremiah, and that's going to actually show a lot of components of technical analysis and price action analysis and spikes that I want to demonstrate, because I had a very in-depth discussion with a friend of mine that's very bullish on Palantir, and we actually talked about different Fibonacci. So I promise I'm going to do that next. But let's see. Let's cover some of the crypto that you guys have put in. Get them in real quick. We'll talk about them, and then we'll look at Palantir, because that's definitely on my live stream notes to look at, along with Fibonacci. So give me just a second. What I wanted to point out here, price action wise, what I got wrong. Now, if I was going to sell you a class, I was going to present myself as like this guru that knows everything, that saw everything before. I did see Bitcoin breaking out in January and March, but I have a personal malady when it comes to being a trader. Everyone's got their flaws. I just have identified mine. I am a contrarian to a fault. That means that when Bitcoin was way down here in the dog days of early 2023, when everyone was still thinking we're going to go down for another leg because of FTX, I saw the bullish setups in January and March. The problem with that is that when something starts looking like this and the Bitcoin maxis are getting really, really excited, I'm starting to doubt it. I am. I'm going to doubt these kind of moves. And so in that doubt, I missed one of my key things that I look for in terms of price action. I'm going to tell you about that right now. So a couple of weeks ago, I was, of course, looking at Bitcoin at resistances. And so from the low of COVID to the all-time high, that 50% level was 36,439. That's on the Bitcoin index calculated by TradingViews. Maybe different on other things, but let's call it 36,500 just for the sake of quick. One of the key principles, one of the key postulates that I use in trading is to wait for bars to close above or below support resistance levels. And that can be a high or a low in the past. If we just take a little line and we draw it out from the high or, from the low. But in this case, that 50% level, 36,500 we'll call it, that is the key level here on the weekly. And so what I should have been doing, instead of thinking that, oh, well, this thing's going to pull back because these Bitcoin maxis, I don't think they're going to win. They got to wait a little bit longer for their wins. I'm wrong. They're pretty happy now. Over the course of the next following week, what price did was it came back and pulled back to that level right there. This is if you go on the weekly time frame with the step-by-step on the bar replay, it goes day by day. Pulls back, and then the second week flirts around that level, and then it closes once again, 2 bars. 2 bars is really what I want to see to confirm or reject a level. Closes to hold that level. And so then we got another week, a third week. And really it's just kind of hesitating right there. And I'm sitting there looking at this, thinking to myself, like, I don't want to short this. I don't want to short this, but I'm a contrarian, so I can't go long. My bad. But I'm telling you guys this because if you are looking to capture some of these big things as they're running up, this is one of the ways that you're going to do it. And so if you keep an eye on that level, you have 3 weeks that close above that level. After the first 2, anywhere in the week of the 20th of November, Thanksgiving week, one could be looking for opportunities in there, and then you probably could have been able to catch it in this last 2-week run up. So really the key thing that I want you guys to look at and pay attention to is when you draw a level, if you want to use a different Fibonacci, you can. I promise you that the 50% are going to be better. Otherwise, you're going to be looking at too many to keep up with, and you're going to be taking trades that aren't really as good as a 50%. But really the thing, let me see if I can highlight this properly. The thing that we really want to key off of is the 2 weekly bars or 2 bars of any time frame, daily if it may be, that close above or below a level. That gives you confirmation of breaking that level, or on the flip side, holding that level. And see, at that point, you can drill down into the daily time frame and perhaps start looking for some kind of a breakout, maybe on a swing trading time frame, like a 4-hour. Get a place where Ichimoku is starting to kind of form a cloud and be able to capture this leg as it goes up. Hey, we're making a new all-time high as I talk. So let's go and look at, let's say, Solana, and the big things today, Solana, and I think, what was it, Ethereum? We'll look at that. We'll look at the major ones. So Solana and Cardano, whichever one. So I'm going to cite the next resistance as getting very close on Solana. Solana's next resistance is going to be 75.71. And that's a really, really good one because we're matching up with the lows of early 2022. That's going to be a very solid level. So if you're in Solana, if you're long Solana, what you want to do, this is a weekly we're looking at. You want to see what this week, next week, you want to see what it does around the 75.71 level. In other words, if we get a bar that closes above it, and then we get another bar that closes above it, you're good to go up. At least that's what you should presume. But if you have the bar that maybe pokes its head a little high above it and then comes down and closes back below it again, that's going to be a hold of that resistance. Notice how Bitcoin, it really didn't give you it gave you doubt intraday. That's why you wait until the end of the week to see where that week closes if you're looking at a weekly time frame. And in this case, going back to 2022, you are looking on a weekly time frame. And so that's going to be the level that you want to look at the close on Sunday. I know it requires patience. I know that sucks. But, I mean, come on. you're already this late into the move and you got a clear resistance above you, you're going to have to see what it does there. You may get opportunity if it breaks above it. Just keep an eye on it. Solana and where was our Cardano? ADA. Where is this level? You could probably use that same January high. We'll do it both. So either from the all-time high down to the low. That's pretty far off. Or from that swing to there. Cardano's got a lot of levels way above it. So we can't, it's got a lot of room to go up. The resistance would be the swing high in April, and it's already broken above it. It's kind of hard to say. There's not much to go on here. Cardano could have some good room to go up. It could, just based on that. That's the resistance I see. Ethereum. Let's see. So swing high in March of 2022 down to the low of June. Aha, see here's one where Ethereum is going to be doing its test. So it is this week going to be closing above 22,298.85, looking pretty solid above it. It's probably going to get there over the weekend. I don't see any more news going to happen there. And so that's going to be another test to see if Ethereum is going to go up. Everything's looking pretty bullish. Let's see. What else? What else we got in there? I'm curious about ACH USD. All right, let's take a look at that. Alchemy Pay. It's just, I mean, maybe you have a good use case for it, but you got to understand, these are all lottery tickets, guys. If you were playing stocks in the early 2000s, late 90s for tech companies, 99.8% of those companies are no longer in existence. But everyone thought that theirs was going to be the one that would win. Right now, you're just playing trading games, okay? So as far as this one goes, I would say this is one of your high risk, high reward kind of things. I don't really like to look at these kind of things because they don't have enough price history for me to do anything. I see a big initial pump followed by nothing. And now it's probably getting a little bit of a beneficial move from everything else. I will see some structure here in that in this move up from October to here, you had that 50% pullback. That's good. Very good, very nice. They're around 0.0. Honestly, I get very, very uninterested in things where I'm having to look at so many digits. I don't like that. I can't do math in my head that quickly with so many decimal places. But everything's looking bullish. That little hold right there, that 50% hold is good. So, all right, what else we got? What else we got? What else we got? All right, let's look at Fibonacci on Ethereum. I'm not really sure. Yeah, if you do the Fibonacci for the all-time high to the low, you're going to find probably that you're going to have a level there. Yeah, it's getting there. That's just too many. Let me jump into. Yeah, you're welcome. Let me jump into Palantir real quick because that was one of the things that I was going to talk about and teach from as well. So last week we ended the stream looking at Palantir. Already got it kind of marked up from last week. Let's clean it all up. So last Friday in the stream, this is what we looked at. So here is Palantir with my spike indicator on there. It's free. Just send me a message. I give it to anyone because I don't want to ask for money for it. If anyone charges you for it, they are a dirty, dirty scammer. So I was having a good discussion with a friend of mine about Palantir. And first of all, this spike is one that I really like. It's a really classic setup here. The reason is because you have this attempt to break out here back in November. And then instead, it gets slammed back down inside the range, mainly getting slammed back below this high right here, proving that it's probably a false breakout. False breakout higher can often be a reversal lower. And so what I want to do in this case is I want to mark off the lowest of the beginning of the trend, which is really going to be the real low. People could make that argument, but I'll show you why this one's better. Up to that high. And at that point, we see that we got a lot of matching levels here. We got a lot of lows here. I mean, that's going to be support. Not only is it the 50% that I know and trust to go on for a profit or for a trade, but everything's just coming together, okay? And when I was talking to my friend about this particular level, he said, well, I think it might get down to some Fibonacci number. And so if we throw in a bunch of Fibonacci numbers on here, we're going to get a lot of lines. I don't like a lot of lines. I got a limited brain capacity. Maybe I don't have enough IQ points to analyze every single Fibonacci line. But what are we really trying to do here with all of these different levels? I'll bring it up to you again with it's. I'm kind of blanking on what we were looking at. I think he says something about the 38.2 or the 61.8, and all of those may seem like good levels to kind of plan for from step to step, but nothing really captures the meat of the trend. Nothing really captures with more accuracy, in my experience, than just the 50%. There's so many opportunities you can find from just that alone. I think one thing I did for him, let me try to remember what I did to kind of prove this. I think I looked at the level from here to here. So even if we were trading back around this time period and we use the 50%, let's confuse ourselves and just add a bunch of lines. So we'll add all the Fibonacci's in here. Oh, crap. Hang on. Even if you analyze just that simple 50% right there, you would have been able to capture that low there at 1376. Meanwhile, are these other levels really helping you? I mean, here's what happens in a lot of cases I see. Someone takes a look at that 38.2%, like right here, and you get a little bit of hesitation in price. Maybe we can see where price hesitated, made us think, okay, it's going to hold, and then it slips down and it finally hits that 50%. That just happens way more often than I would like, and I'd really just look for that 50%. It just works so much better, so much more consistently over everything else. I mean, we can look at this list right here. There's a lot of things I've talked about in the live streams all year long. They've been great opportunities at 50% retracement levels. And plus, it works a lot better on higher time frames going upwards. I mean, just to name a few, the trade of the century, as I've cited it, is the Amazon trade. Last 20 years from, hey, thanks for the hearts. Hey, Amer, where'd you go? Amer, we miss you. We miss you, buddy. We love you. It's okay, buddy. You can come back to us. Everybody misses you. Everybody's asking me where you went. So 50% is basically the high to the low from 2001 all the way up to 2021. Now, what if we were to try to analyze Amazon with all these lines right here? Did we really need to go in here? Like if we had tried to buy Amazon at the 38.2, we probably would have gotten stopped out. If we got it at the 50%, we probably took a little bit of drawdown, but we didn't get the 68.8. Now or 61.8. We're missing it. 50% just worked better. Tesla earlier this year. Multiple instances, I've got 50% on here. So earlier this year, we did a little bit of a, let's see, in the first part of the year on Tesla, from January up to the high right here, here's our 38.2. Okay, we got a trade here, but it didn't really get up to the high for us to take profit or anything. And then finally it came down, hit the 50%. It hit it anyway. What about if we look at the broader scale where I actually added to that position the 50% of the entire 2023 price range? Up to here, okay, once again, we get down to the 38.2, comes up again, doesn't quite get to the high, pulls back to the 50% anyway. Pull back to the 50, it came to the 38.2, showed us some sign. And maybe if you're a day trader, maybe if you're looking at this from like, okay, I'm going to take a very short-term trade off this 38.2 and then I'm going to take some profit back at, I don't know, if you're doing some Fibonacci, or excuse me, some Elliott wave analysis that, I maybe didn't study hard enough to remember. Maybe you're able to then calculate, I can take profit on the 61.8 going back up. But now my chart looks like this, and I'm my eyes. I don't like it. I don't like it at all. I am Sam I am, and lines I do not want. So over the years of me trading, this is what I've done. And it's really all I need to do. I'm not really trying to take a trade every day, guys. If you're trying to take a trade every day, you can have some indicators, dozen if you want. They'll give you trades, but that doesn't necessarily mean they're going to be good. There's Tesla, there's Home Depot, which I know is on the monthly 50%. Just Home Depot holding that COVID low to all-time high so consistently for multiple times on the monthly time frame. What else we got? Coca-Cola. That was one from, oh my God, it's so beautiful. Coca-Cola, I mean, what better evidence of a 50% hold can you find than that? Oh my God, that's a beautiful trade from earlier. Back when we had all that crazy, well, we're still having that crazy stuff going on in the Middle East. RTX, Raytheon, we had about a week or two to grab that at the 50%. Northrop Grumman, this was one where even before that unpleasantness happened, price held 419 there multiple times going into it. And again, if we go back to Bitcoin, I know a lot of people want to add a bunch of lines and find better trades, but the best trade was that breakout in January, and then you had the 50% hold there in March. It was a 50% of the low up to that high from there. Great hold. Great hold. I could throw more lines on the chart, but I'm just going to confuse myself, and I don't want to. That's my thoughts about those. So, all right. Let's see. All right, Casey, we'll look at your stuff here. Get them in, and we'll take a look. Let's see. So that's my follow up on Palantir. It's funny because among my friends, I'm kind of like the uncle, and I guess my other friend is the aunt. And people want to go long, people want to go short, but I'm of the opinion that this spike is going to play out, and it's going to come down to, 1457 would be if you took it from there, but I'm one that always goes for the low of the lows, and so that's going to be your one based on the retracements indicator of mine, or the proper 50% going all the way back to the low, 13.89. So support at this point I would be looking at is going to be in that range. Where's my rectangle? There we are. So support's going to be in that range right there. So that's what I'm going to be looking at on Palantir. Monster sugar water. Man, I'm telling you, sugar water has been just as good, if not better, than cryptocurrency. Monster's doing some interesting stuff. It's not YOLOing up again. Let me clean things up, take off my extra indicators. This is when I want to illustrate a point to you guys in a teaching mode, I strip away all the indicators because that lets me demonstrate the efficacy of single types of analysis. It also helps me not get confused and see things that aren't there. Charts will play tricks on your mind, especially if you're approaching it with a little bit of emotion. So Monster is one where if we take from the COVID, that wasn't COVID low, excuse me. That was the low of March 22. Actually, the COVID low was here, up to the all-time high here. What's that? 50%. Again, if we want to get cute, if we want to look at the 38.2, we had maybe a 38.2 touch right there. I'm not sure. Let's see. Well, that's 38.2 is 40.43. The low there was 40.46. So a little bit of a miss. that's why I don't tell people. No, I am telling people not to use it out of simplicity. I'm not saying that you can't find opportunities on it. It's just the best opportunities are going to come with the 50%. I feel very confident saying that. 50% monster, and then on this leg up, 50% again. Now, here's the problem with this. Monster is actually going to be a very good teachable moment here. What you want to see, now, just think about this. When you buy something, when you buy a stock, when you buy a crypto, when you buy it, you go long, you want it to go up, right? Yes, that's not a trick question. You want something to be as bullish as it freaking can be if you're long. You don't want it to kind of hang around. You don't want it to consolidate. You don't want to make you be patient. You want this thing to moon the day after you buy it. Failing that, the second best thing for it to do is to get to the high. That way you can take some pretty good profit between the 50% and that high that you had right there. But you want to hold on to your winners, right? You want to let your winners run, cut your losers short, right? That's the old adage. And so you want to hold on to winning trades as long as you can to try to get a bust out of that high that lets you base that 50%. And so you want to kind of sit in it. You want to kind of sit and remember how we were talking about Bitcoin earlier in the live stream, how we were talking about how price behaves around supports and resistances. Here, of course, is the high. And then look at this price action right here, setting up a floor based on that past high. That's exactly what we were looking at with Bitcoin on the weekly at the beginning of the live stream. Let's go back to that in case people were catching. So the resistance turned into support for Bitcoin based on the COVID low to the all-time high. Back on the weekly was right here. A little more defined there on Monster. But here you see you got above that 50% level of the low to the high there. And then you have one bar that closed above it, two bars that closed above it, three bars. And once it established that hold of that level beneath it, then it felt good to go. So now that's the exact same concept that you want to be looking at whenever price gets up to a major high or low. So let's go back to Monster. Continue my narration. So once you get, and these are all weekly, by the way. I mean, I had a person ask on Discord earlier this week, or maybe it was late last week. What do you think about the difference? Actually, this might have been a personal message, but I answer them both. I forget. If you want to send me a message personally, you can. I'll answer your questions. I think, okay, here's what the person was doing. They were having trouble trading the lower time frames, and they came to me for help. They're like, I'm losing along the lower time frames. What do I do? Well, that's graduate higher. It's not, the word they used was the lower time frames were riskier. I don't like that word because risky can mean a lot of different things. Are you taking on more risk, or are you dealing with something that has a lower probability of success? I think that's more what you're saying. Lower time frames have a lower probability of success. That's because there's a lot more noise. There's a lot more chance for volatility, a bunch of whales to come in and fat finger an order and mess up your trade, take out your stop. Higher time frames, you get to see these price actions work out a lot more, my word, beautifully. And so those are a lot better to teach from because you can see and you can be patient over the course of many weeks. This took a couple of months on Monster to set up. But finally, to continue the narration, you want something to do this. You want something to break above that high, and you want it to just keep on going. You want it to keep on pushing higher. And that's what Monster did for the better part of this year. Now, you set up this second little push, and I think we did note that once again, that 50% was what held. Now, let's think about it this way. We are a trader. We bought it at 48.18 when it pulled back to there. And we want to do, like I said, aside from going on to infinity, we first want this thing to get up to the high. That way we can maybe take some initial profit, take a little off the table. Ideally, we want to see it bust through that high. But what happens when it gives us a little bit of a question as if it's going to actually follow through? That's what Monster's doing right now. So now we have to drill down to the daily. We got to use that same principle. Let's look at the 50% of this price action. Got a nice little earnings gap right here, which matches up with it. And so what we're going to end up happening on Monster, I don't know if you're long or short. Don't influence me. I'm going to give you my objective opinion. You want to watch this 53 level right here, and you want to see what price does at it. If you're long, you want this thing to come down, hold it as support, come up, finally get to that high, and then, of course, break it. But if Monster, if MNST comes down and does a close below on the daily, weekly even, and then maybe you get a second one as well, now you've got a potential breakdown coming on. And now you got to make some hard decisions. If it were me, I would probably start offloading a little bit of risk because it's not doing what I want it to do. I want this thing to go up. Think about it this way. If this thing was going to go up, it should have gone. It should have made a new time. It should have at least hit the high, which it did not. It should have broken that high, and it's not. Now it's giving you some grief. Now it's coming back to your entry. It's the same place you took it. It could come back down and hold that support again. But, you know, the good trades that I have, the really good ones, they're always a little sketch when you put them on. There's always, when you're taking on risk, you're always going to be thinking like, this feels uncomfortable. This risk that I'm taking on, that's important. You know, the alternate is for people to buy something that's up 20% in a day, because that feels freaking good. It feels really good to buy something that's at up 20%, you big old green 20 and a percent. That feels good because you're with the crowd, you're with the herd. Everyone's agreeing with you that it's just the best thing ever and going to keep on going up. The hard part, the thing that makes traders is people that are willing to buy something like Monster when it looked like this. This is hard. It's hard to buy something that looks like this. It's difficult. It hurts. Maybe it doesn't hurt, but maybe you just kind of like, you're just like, yeah, this is my rules. I got to take this. They're not going to feel good, but those are the ones that are actually rewarding. And then once you're in this position, once you're in a bullish trade, you already got this profit. No matter what you do, no matter what day you go and look at it, you're going to see a positive on your P&L. There's no reason to worry about it. You just kind of let it go. It doesn't give you concerns. A good trade won't really give you concerns. That's the best way I can put it. It's the most succinct way. A good trade won't give you concerns as it develops. Actually, I have to kind of specify that. When you first put it on, it's going to feel bad. But as it develops, it shouldn't keep giving you grief. If you're sitting there at a position that keeps going against you every day, that's nagging you, the market's telling you that you're wrong. Maybe you won't always be wrong. Maybe you still stick with your rules, stick with your stop. But the good ones just go. They just go. All right, guys, we're coming up to when I typically try to wind things down. I got Casey's breakouts to look at. Missed you for a while there, Casey. A couple weeks. Hope you had a good Thanksgiving. Get in your questions and or your symbols. We'll take a look at them as we wrap things up. All right. Jen. All right. Hershey's. What we got? Give me a quick run up of everybody's on Discord here. By the way, guys, I stream this every Friday, 4 p.m. UTC -5 Eastern Time on Discord, TradingView, and YouTube's HSY. Hershey's. I like chocolate. Apparently, people don't like chocolate that much right now. Why are they doing so bad? Probably fundamental reasons. Well, COVID low going to be our defining point on this weekly. Not good. Not good. This is what you call a break and retest to hold as resistance. This is going to get into the, I need a soundboard. Dum dum dum. The valley of risk. The valley of risk is a concept that I coined. The valley of risk is this area that is when you break a 50% level, you run into this valley where you don't know where the bottom's going to be. You don't know where it's going to turn around. Typically, if you sell, it's going to turn right around. And if you hold, it's going to keep going against you. It's because it's broken that major 50% of the trend, and now you don't know what it's going to do. You're in this deep, dark valley. And it's best to just go ahead and, well, hashtag not financial advice. Let me show you some examples. Zillow is the one I always go back to. And GIG, you've seen these before. You know these examples where you break below that 50% level. I mean, there's a lot of examples like this. You break below that 50% level from the trend, and it comes down, maybe flirts around with it, maybe even gives you a little bit of hope, but ultimately, you're in trouble. You're in trouble when that happens. That's Zillow right there. There's one right now that I've been looking at, which I actually need to do an exit on, which is Target. Target has broken its low there, going all the way back to 09. But I think I did that just to kind of analyze it from that perspective. But yeah, Target's not doing too well. There's normally these, I get out of these and I let them off the list. Zillow's the one I remember the most. Was it Meta? I think Facebook's been doing pretty good, actually. No, that wasn't the example. There's just a lot of these examples of once they break below the 50% level, it gets very dicey. But the problem with Hershey's I see right here is that you've already broken below it. You come back to hold it. Yeah, if you kind of get out of this little range that's created over the last month or two, that's going to be very problematic for that. It should have gone. They should have gone. Should have held. All right. Hershey's Peloton fun ticket. You know, Peloton was one that I really didn't have to think that hard to avoid. Growing up, my mom, my dad, they bought exercise equipment. They'd use it for a month and it'd go down in the basement. Why did anyone think that this would be different, especially when it's based on a subscription model? Because COVID. Because everyone thought that what was the present was going to be the future, and no one could go outside. Well, you could, believe it or not. Like, fortunately, it wasn't like China where you didn't have drones, floating around, making sure that you're in your house, welding you inside your house. Fortunately, here in America, you could make your own decision to reject the tyranny, but a lot of people didn't, and they just thought they'd be exercising inside their houses forever. So a lot of people bought Peloton thinking it was going to be the end-all, be-all, and there's been a lot of things this week. There's Peloton, there's AMC. We've kind of gotten into this. Well, AMC, no. AMC. Wasn't AMC a fun ticket you guys bought? What was it? GME was the other fun ticket. Yeah, I mean there's been some fun tickets the last couple of weeks, but I don't deal with any of this stuff. So, all right. Hey, you're welcome, Jeremiah. I try. All right, let's start. Oh, DVN, Stone Pilot. He put in DVN, Devon Energy. Is this a utility? Because I've been hearing some people talk about utilities. Utilities are typically defensive plays. 4205. That's why I like doing this live stream for you guys, because you help me. Well, let's just do this. Let's use. I wonder if I can set an alert on the indicator. No, I can do alerts on lines though. Let's just use TradingView. I'm going to be very picky. 4205. 42.05. Bloop. And look at that handy thing. We set an alert right here. I love TradingView. That's why they're giving me a mug. That's their payment for me. Shilling them is they're giving me a coffee mug. I don't care. They got old Norok here. I know I said this in a tweet when I was trying to get people to get the Black Friday special.
Back in my day, I had to download OHLC data and import it manually to get charts of Bitcoin. Yeah, we had to draw our own lines and walk 3 miles uphill in the snow each way to download that data. And then TradingView came along, and it did it all automatically.
And I mean, TradingView is here because of cryptocurrency. It really is. I mean, it came around right at the moment when young, trading-minded people started getting interested. And up until that point, you had to have like this software MetaTrader, which was okay. People argue that it had like backdoors and stuff like that in it, but by the way, when you do alerts, do once per bar close. Alert name. Thanks, Stone Pilot. This is not the first opportunity that Stone Pilot's come in here and says interesting. I'm glad that people watch and know what I find is. Oh, warms my heart. Love you guys. Boom. Oh, wait. No, I don't want webhooks. That's for my Discord alerts. Notify an app. Yeah. Okay. I can do SMS if I wanted to. That's fine. Boom. Alert set. Yeah, you can webhook to other applications. TradingView's so awesome. TradingView's so awesome. All right. Let's go through Casey's. DHI. Casey, for you guys that don't watch every week, he likes his breakouts. DHI making a new all-time high. Go, man, go. FRM. This looks like a lot of crypto out there, and you have a very nice open range. I would say that this low right here in May, and I'm going to discount that because then we just count everything. But yeah, if this thing's taken off, might want to get that Ichimoku out, but that's okay. Lynn is trying to steal my sunshine. That is a boomer joke. Breaking that all time high. It looks a lot like DHI actually. PANW. Yeah, I mean there was someone that posted this earlier on Discord. Join in, everyone. I like this. I like this narrative here. PNW going up. I think we were looking at this last week. Here's another example. I think a 50% maybe. Maybe not. No. This is an example of where price, again, got above a level, pulled back to it to confirm it. Boom, up you go. This was something that posted. I like this. I like these analysis. I need to ask him where the website gets these from. What it means, investors are scratching their heads. This is from the news today. The jobs number came out better as expected. Investors are scratching their heads to make sense of the latest job numbers. Why? Everything's so bad, the media says. If employment falls and the economy creates more jobs, and the Fed might raise rates again. I think, well, you got to write this stuff to fill news articles. By and large, my opinion, the Fed is they're going to get inflation at 2%, and then they're going to act on it. Yes, they want to keep unemployment high, or excuse me, low. Sorry, depends on what your opinion of the lizard people are, but so it's basically, economy's okay. That's the takeaway, as opposed to people thinking that everything's just going to go to crap. You need to assume in any given year that the stock market's going to go up. You just do, because statistically that is true. People don't want to hear that because they want to be the smart ones and recognize that crash, and so they end up accurately predicting 2 of the last 49 stock market crashes whenever they put out news every week about how bad things are. Have you been in this for a while? PHM 97. Oh, these are new. Okay. The only question I have, I mean, this, if you were getting into it back in November, I'd be more comfortable with that. It's just, this is a good breakout right here. We have that bar close above it, then the one next. And if you're getting into it here, I know we're going back in time, but I'm more comfortable. You're getting a little long in the tooth here, so we're getting a little bit far into the trend, but I trust you know what you're doing. Toll. Toll Brothers, apparently they're doing better than Hershey. Looks about the same. Yeah, a lot of stuff is breaking up. So yeah, good stuff. Let me check my notes because there's one more thing I think I wanted to talk about. And again, guys, if you got stuff to talk about. Oh, another instance of spike. This was in Take Two Interactive. This was a question on Discord earlier. So again, guys, I have a guy asked a question. That's what I have the Discord for, is for people to ask questions about the spike indicator. Is this a good trade? Is it not? More than happy to answer. They were asking, okay, well, is this a good trade? And it has the qualifications. This ATR clear is a measurement I use to measure, okay, the average true range ATR. How much did that breakout go up, spike go up and down versus the last few bars? It has the right number, 72. I want to have 70% or above, ideally. 80% is better. But if we zoom out and we look at it in context, again, if we look at this from a 50% perspective, from the high back in February of 21 down to the low of November of last year, you see that it first came up to this level here in July, this summer, kind of hesitated a little bit, but then got back above it. And now we're here. We're already above that, what was a resistance level. In fact, this week, having closed now, is now giving us multiple weeks above that level and even a bar that came down to test it, to hold it. So we can be very confident that is now a resistance turn to support. And the fact that this spike is happening, a short spike, is happening above that level, it makes me pass on it. I want to see everything kind of line up in context. And so if you have a spike that is at or below a resistance on a higher time frame, that's what I want to see. That it's not that this won't work. It's not that we don't know what the future is going to hold. It's just by combining all those factors together, you get yourself a much better chance of having a successful entry. It's just, you want all these things to come together. It doesn't happen very often. That's why I said I'm not trying to take a trade every day. I haven't really traded that much in the last couple of months. And that's because, I'm really quick on SPY and everything else. Let's do a quick market recap. That's because the best trades of this year were back during the banking FUD in March, when everyone thought that the dollar was going to fail, et cetera, yada, yada, blah, blah, blah. And in October, where we had this dip and everyone thought, okay, this is it, because reasons, they didn't really have good reasons. There was a fair reason to narrate back in March because of the banking FUD. But in October, there wasn't really a reason. It just went down. And so as we get into we only got like 3 more weeks of the year left, okay? I'm just going to let things ride. I'm not really taking that many new positions. Maybe a few like clever shorts to kind of be a contrarian about things. But it's not that there's not any more opportunities. It's just the best of the year were back when everyone was so damn scared. March and October. And now we're going to start a new year here pretty soon. And January, woo, that's a crazy month. January, I take easy. And we'll talk about that more as we get up close to it. But it's hard to go long at this point. The good times to go long were when everyone was running scared. And now you got to sit on the positions you put on earlier in the year. And on my watch list here, I mean, those are, Amazon, Cat, Kroger, Met, Home Depot, TFC, Tesla, not Rivian anymore. Nvidia, that's in like a long term. I wanted to short it, but I haven't. I'm glad I haven't either. Coca-Cola, RTX. You just gotta. I'm just sitting. I'm just making. You make more money by waiting than doing. That's not my address. That's Jesse Livermore. All right. Hello, Whitebeard Trades. You're coming in a little late. All right. I think that's going to be it for this week, guys. So thanks for stopping by. I hope you trade wisely. Hope this has been helpful to you. Click on the links below if you want to catch me again in the week. If you have questions about my indicator, if you want it, send me a message on Discord. Join the Discord. Ask questions there. Love to answer, and trade wisely. We'll see you guys next week. Have